Welcome
This
everyone.
meeting is being recorded.
Today we have with us Sahil Sharma sir. Everyone knows him of Twitter. Like he's a very big inspiration for me to who has inspired many of me to learn about stock markets and investing in general. Welcome to the show, sir.
Thank you so much. Thank you for having me.
Great. My first question to you is, sir, what was your early life like, and what inspired you to give JEE means or IIT-JEE as we call it exam?
Um, I think most relevant thing is that I was very interested in mathematics from very early on, and I always sort of enjoyed the challenge of mathematics, which is that you are given a very small set of axioms, and from that you can then build more and more complicated knowledge and complicated deductions, and kind of build on top of each other and basically use the power of deduction to go from a plus b to whatever it leads to. And uh, the truth is that most people around me were pursuing IIT-JEE, so I also sort of signed up for this thing called FITG, which is Forum for IIT-JEE, the coaching classes in 11th class, and that's how it started.
And how did you get into IIT Madras? And in IIT Madras, what all things did you learn about coding and investing in general?
So I mean, yeah, basically this FITG thing is there, and we used to have classes uh, 3 or 4 times a week, and it's basically about practice, right? You practice enough problems, and then the uh, exam happened, and I just tried to do my best. In fact, in the second exam, actually, I mean, it used to be two-part, and it was just called IIT-JEE at that time, and like both 3 hour exams on the same day. Second second paper, actually, I uh, messed up really badly, in the sense that in the first 40 minutes, I think I got only like 2 questions. That's because I sort of took it personally. Like one of the questions there was very similar to a question I had already solved. And so I took it personally that how can I not solve this? And I really wasted a lot of time. And then after 40 minutes, I sort of realized, I need to move on and do other things, and I can't just get stuck on one question. But yeah, that was the thing. Then I got around the 900 rank, and
In JEE Advanced or mains?
actually we only had advanced at that point. We didn't have means.
Oh, okay, got it. And when did you give this exam in 2000?
12.
Okay, got it.
Yeah.
And since then, the exam got divided into two parts, right? JEE mains and
Yeah, I think the next year onwards it became advanced and means. For me personally, it was uh, like I wanted to do computer science. Even in school, actually, I used to do coding. And the again the background there is that there is this thing called Olympiads, which are like uh, you're given 6 difficult questions to solve in 3 hours, and you're asked to sort of solve 6 questions, which itself is very fascinating. You get a very small paper, maybe the size of a Hanuman Chalisa, a small Hanuman Chalisa, one paper, just 6 questions, very succinct, and you're supposed to solve them. And everyone is sitting and solving for 3 hours, so obviously they are very hard questions. That's how I started out. And then there's this thing called Zonal Informatics Olympiad, which again, like, it's so fascinating. But basically, what happened is that they teach you programming, but by hand in that Olympiad. Basically, I mean, in that exam, it's like a programming contest, but you're supposed to do it by hand. You don't have a computer. So that also sort of again teaches you that algorithmic way of thinking, because those questions are such that if you apply the algorithm, you can do it well even with a hand. If you don't apply the algorithm well, you cannot solve it even with a hand, or like what however you want to do it. And similar kind of like 6 questions, 3 hours, again very hard. And yeah, I mean that's how it started. And but then my rank meant that I wouldn't get programming, computer science anywhere in the good IITs at least.
Okay.
So I had to take electrical in IIT Madras. In fact,
Okay,
what
so
I
the
really
rank
wanted to do
mattered.
was take.
So the rank
Yeah,
is for
please
the
go on.
rank you had to get 900 didn't get you into any computer science degree or what?
Yeah, yeah.
Okay. Okay. Got it.
Yeah, but like if I had gotten even one question right in addition, I would have gotten something called mathematics and computing in IIT Delhi, MCA, and I would have taken it blindly because it had math and computing, and it was in Delhi where I live, so I would have taken it blindly, but I didn't get it just by one question, like because four marks, and with 4 marks my rank would have been much higher, maybe 700 or 800 or something. It's very like one marks matter. So after that, like basically, I went to electrical, and one thing I realized very quickly is that people are so happy to be in IIT that most people are not willing to work hard. They are, and also like maybe 70% of them have not seen freedom in their lives. And I mean that's sort of a statement on our education system that like people have to slog for 2 3 years and sort of completely give up on everything in order to do well, and they completely don't have any access to freedom. So when they get to IIT, everyone is just enjoying their freedom to the fullest in every way possible, and especially indulging in things like maybe watching TV shows and movies, and basically whatever has happened in the last 20 years, they'll try to catch up to that. And what that meant is anyone that is willing to work even as much as you did getting into JEE, you have a big advantage actually, because most people are not going to. So I used to go to the library, try and study, because actually, Chennai is very hot and humid. It's actually very hard to even concentrate in the room. But we have air conditioned library and stuff, so you can go to the library. So I studied just as much as I did getting into IIT. And there was this thing called branch change,
Okay.
which is basically it allows you to change from electrical to computer science. So I think all IITs have it, maybe other colleges also have it. So like 2 or 3 people in every branch get to change to the sort of some other branch basically. And it's all like again like a ranking system. So I was in dual degree. So everyone in dual degree could apply to any of the other branches. And then
Okay.
they will take everyone who has applied, they will sort by your CGPA, and the top K will get it. K is roughly 10% of the branch capacity. So if a
Got it.
branch has, let's say, 30 seats, then they can take three more.
Three.
That's yeah.
And
So
what
that's
is
how
the
I got.
meaning of a dual degree?
Basically, it's MTech plus BTech. So
So six
you get
years.
5 years. So that's the advantage. That
Okay. Got it.
yeah, yeah.
Okay. Cool.
So you get
So
BTech plus MTech in 5 years. You were saying something?
so basically 3 years of your B.Tech and then 2 years of M.Tech, right?
It's basically a little
Combined.
difficult.
Okay.
It's a little different. Like basically the difference between the two is basically the dual degree project. So you're supposed to be a little more research oriented, work with some professor, maybe even starting from the third year, and start doing some research, and then publish some papers, and that is your dual degree basically.
Got it.
So it's maybe one or two extra courses, and mostly just this research and stuff. Um, so that was my starting point, and then computer science. I enjoyed the courses, studied the courses. I didn't know anything about investing at that point in college.
Okay. Okay.
Yeah, so
Got
it
it.
was just computer science and coding, and actually more than anything else, machine learning and the research in machine learning, things like that.
Great.
Yeah.
And when did the kid of investing caught you?
Basically, after graduating, an incident happened. I was staying with one of my friends. He was from my school actually. His name is Dhruv Chadda, and he told me that his father had actually made a enormous amount of money just doing SIP in mutual funds over 10 20 years. So that it really stuck with me that you can even be in a normal job and do a SIP and build tremendous amount of wealth just through the discipline of doing it every month for 10 years or something. So that was a starting point. I thought that okay, then I should also try something. Until that point, I think I was just keeping money wherever it was, in like bank and some of it in Google stock. I was not thinking about it. Then I thought, okay, let's think about it. And yeah, I started evaluating mutual funds, looking at money control and stuff like that.
How did you get into Google, sir? The story behind it, and what you do now in.
Yeah. So in Google, the thing was that in third year we have internships, and sort of everyone agreed that as far as India is concerned, Google is like the best company in internship at least. And so what again the peer group matters a lot. So the people I was with, uh, the people from my batch wanted to wait for Google. So I thought that, even I should wait for Google. So even though Google was like one of the last companies to come for internship, I didn't sit for any others like LinkedIn or Microsoft, because if you get it, then you can't sit for anything else, because they want to
Okay.
get as many
Okay.
people internship as possible. So bunch of us, 5 6 people, waited for Google, and then Google came in November, uh, and we gave the interviews and got the Google internship. And like they have this thing called PPO, pre-placement offer. So I interned once. That sort of got me two references. So my host and my co-host will give me some written, like how did I perform, some rating, stuff like that, right? After that, because I was a 5 year intern, I was able to intern a second time at Google. And second internship also, the host and co-host gave me some rating. And then they said that we have like 4 data points. We know enough about you, and we can just directly evaluate you now. We don't have to do any interviews and anything. So they evaluated and they gave pre-placement offers. So that's how it happened. Yeah.
Fantastic, fantastic, sir. And coming back to your investing story, how did you get in? You talked about how did you get interested in stock market first, but then how did your learning curve happen? Like what all things did you, uh, what all resources you looked up to learn more about stock market?
Actually, the one of the very first things I did, there was this website called Money Works for Me. For me,
Hmm. Hmm.
I visited it,
Hmm.
and I could actually understand the website also, because I know a little bit
Yeah,
about computer
coding.
science. So then I thought that, let's just get all this data in my laptop, and then I
Hmm.
can play around with the data, just look at the data. At that point, actually, I didn't know about streaming. So I pulled all the data, and then I started, because what happened is that uh, I tried to invest in mutual funds, but the difficult thing for me was how to evaluate the mutual fund. And anything little, if you read, what it will say is that you cannot evaluate mutual funds based on past return alone. Because so many things could have changed. The same investment officer might not be there, same mandate might not be there, same parent might not be there. So many things are possible. So then my question was, how do I evaluate the mutual fund? Underlying its holding companies. But then I have to evaluate 50 companies or 100 companies. That
Correct.
looks like a very daunting thing. So I thought that I should start somewhere by evaluating companies. Like it looked like that atomic operation you have to do. So that's how like I started going to these websites like Money Works for Me, downloading some of their data, looking at it. Um, in parallel, I started reading some books. I would just Google for investment books, and whatever came up, I would try to read. So generally, Joel Greenblatt's book are sort of the more easy ones, or the first books one might read. Intelligent Investor comes up, but I think at the beginning of the investment journey, it might be a little bit hard to appreciate compared to other books like maybe Magic Formula Investing. Very straightforward. And whatever ranks highly on the combination is a decent enough heuristic, and you can invest with that. So that's what I wanted to do. I wanted to implement Magic Formula. That was like one of the first things. I mean, I might still have some of the spreadsheets from back then. I just downloaded data, put it in a spreadsheet, ranked it, and then combined it. And then I tried to augment it also, that instead of just looking at earnings yield, can I look at the PEG ratio? Can I do PEG ratio and ROIC and combine it? I tried many such things. That was like the starting one.
So you develop your own investment, some sort of process that you will look at tag ratio, you will look at some more these more of these data points, and then evaluate
Yeah.
companies based on your understanding.
Yeah, but fundamentally, the problem I understood even back then is that just because a company has had good growth or good ROIC does not mean that it will have good growth or good ROIC.
Hmm.
That was the problem I understood. You cannot just extrapolate the past into the future. That doesn't work. And in fact, I would say a big shortcoming for most investors is that they are so biased by the past that they are unable to evaluate the future with a clear lens or a unbiased mind. So I think the journey of going from just looking at numbers to understanding the story behind the numbers, that is the investment journey for everyone. And it's a lifetime journey. You cannot do it in X number of years. It takes the whole life, maybe even more than one human life to do it.
Fantastic, sir.
Yeah.
What is your idea generation process like other than screener? Like you have shared your idea generation process using the whole screener in 2 or 3 or fantastic threads on Twitter that people know. What is your idea generation process other than screener?
I think other than screener, there are many places actually. Like one of the most important, I think, is I have a observation in general on life that people that are willing to work hard are actually compounding their skill and the goodwill that they generate in society. So if you're willing to
Okay.
work hard, you actually attract ideas. You don't look for ideas. People will tell you their ideas because they know you're a hard worker. If you're working hard, people know that you will work hard on that idea. So other people will tell you that, look at this idea. What about this idea?
Hmm.
Do you see where I'm coming from? So I
Got
think
it.
the thing that is most people will say, I don't know where to invest. That's not the good starting point. The good starting point is I'm willing to work hard. That should be the starting point. And if you're willing to work hard and you show that to the world, then the world will open itself to you and say that, this is my idea. Can you work on this? That is what thousands of people will say to you.
I think the working hard has come from your JEE days. Like you worked hard at that time also, and you are implementing that in different fields. Like you worked hard in coding also, then you little bit mastered it, then you are implementing that in investing also, right?
I think JEE definitely, but not just JEE actually. I
Hmm.
want to go even before that. I think it really started with Olympiad because these problems are so terribly hard. On some problems, I would remain stuck for months. Just one math problem, I would try it many times, maybe once a week, twice a week for a month, and I would still not get it. And then I would read the solution and move on to other problems. So I think that was the starting point. If you when you encounter something that hard early on in life, with the open mindset of the willingness to learn, rather than saying ki this is outside my competence, I cannot do
Hmm.
it. That's like a closed mindset. Open mindset is, I will try to do this, I will try to learn how to do this, and I will ask others. Even at that point, I was a very uh, like, I would say ki in the larger scheme of things, you could say I was a good student, but among the Olympiad people, again, I was very noobish. First time I gave Olympiads, I got not that good marks, and uh, but I was willing to learn. There were other people who were better than me. I would proactively message them, ask them, what books can I read, how can I do this, what did you do? That willingness to learn. So I think that curiosity and willingness to learn, willingness to work hard is the first point. And but I would say you're right that I think early experiences do shape our basically worldview and like how we end up being.
Great. My next question to you is, uh, uh, why do you like investing in micro caps or small caps?
There are many reasons actually, but the most important one is um, I the ideal investment for us is the one that most people do not want to touch today, but will be forced to touch in the future. And the reason is that in that case, you do not just get the earnings growth, you get the valuation expansion also, the double engines of wealth creation, which is the earnings growing and the valuation re-rating, and both happening together. It's a very powerful combo. So I think that is what I want. And I think that microcaps are one of the most inefficient parts of the market because of many reasons actually. But the biggest one is that most institutions, most people with decent amount of money would not want to touch microcaps. They would want to go into more safer places or more like companies
Got
that
it.
are doing con calls all the time and stuff like that. Yeah.
My next question to you is, how do you develop contrarian opinions? Like I've noticed this in myself also, that if I buy a particular stock, I'm too biased towards it. That I can't accept the contrary opinions or antithesis pointers to it. So how does one make oneself immune to contrarian thoughts and antithesis pointers against his
Yeah,
holdings.
right, right. I think there are 2 points to this. Most important, in my opinion, is for the investors to understand that most things in life, including investing, are probabilistic.
Hmm.
They are not deterministic. We might think that we know how it will end up being, but we don't really. We might have a decent idea, but we don't really know how it will end up being. So as soon as we are willing to accept that it's probabilistic, we should then understand that there's some probability it will not happen the way I think it will happen. Right? That's the nature of probability. As soon as you've understood it, then you will start thinking about what kind of things can result in this not happening. Whatever you have predicted, whatever the company has predicted, right? And the idea behind developing antithesis is to be on top of the reasons that the thesis would not pan out, so that when it starts not panning out, rather than thinking afresh, you can take that thinking that you already had, exercise it, and then get out in a very short amount of time. I would not need to think afresh when things start not working. I already know what can go wrong, basically.
Fantastic, sir. The next question is about Value Picker Forum. You have spent so much time on Value Picker Forum that I think I don't remember how much ago, but you are also tweeted that you have spent that some 30, 60 days on Value Picker. That is a lot. How much has Value Picker helped in your investment journey, and why should one use it?
Actually, there are multiple parallels to be drawn between value picker and other human endeavors. Uh, let's say for mathematics olympiads, there's this website called Art of Problem Solving, which is again a forum where people try to solve hard math problems together.
Hmm.
So X will pose the problem, then
Hmm.
everyone else can start developing solutions. Others can point out problems in those solutions. I think I already had some experience with this forum kind of thinking.
Correct.
Someone will post a puzzle and others will try to solve it together. And if you think about how companies are, that is also what companies are, except that they are
Puzzle.
backed by capital and stuff. But again, there's a tough problem or a puzzle that they are trying to solve together. That's exactly what value picker is, right? There's a puzzle which is a company, and everyone is trying to solve that puzzle together. uh, so I think again that way of thinking or that way of looking at the world, that scope to collaborate with people exists so that we can together figure out the hard problem. That thing was clear to me because I read through so many things. And like when I looked at Value Picker, I went to some of their discussions. And then if you start exploring, you'll start finding patterns for like who to follow more or who to read more. You can browse by user profiles. Ayush sir, obviously, who created Screener and Value Picker, is one of the obvious people that you should read as much as possible. So yeah,
I
that's
think
how it
Ayush
started.
Mitra's philosophy is also mainly based on micro caps and small caps, right?
Right, right. Yeah, yeah. And I think that is definitely a big sort of like, because I learned a lot from him, that bias shows up in my investing also. But again, like, it started by me reading everything he has written and then talking to him a little bit, understanding his thesis. Why does he look at something, not look at something, ignore something, give more importance to something?
Fantastic. My last
Yeah.
question to you is what all things and interests do you have other than investing and coding?
I think most important thing is that I want to understand the nature of our reality a little more. If you zoom out and look at like everything together, it will seem very discouraging, because eventually everything will go into a black hole, suns will explode, supernova, right? I frankly don't understand the nature of our reality. So I do spend a lot of time reading about physics, biology, uh, the search for other life. I personally feel that if we can find alien life, it would be one of the like landmark moments in human history, because we would comprehensively understand that the world does not revolve around us, even though the like uh, early humans used to believe that everything revolves around earth. then I think Copernicus or one of the physicians proved that no, it's actually heliocentric and we revolve around the sun. I think still somewhere in our minds, everything revolves around us, like in our social makeup and our mental makeup, right? But I think if we find aliens and like intelligent life, it would be like, for me, it would be like a spiritual moment. So that's something I'm very excited about and read a lot about. And similar tech and like futuristic things, uh, like the fact that why do we need to die, right? Again, like conscious beings come into existence as a natural consequence of evolution and biology, but then they degrade away. That's what we do, right? And it's not like a law of physics that we need to die. So again, that quest for longevity and David Sinclair and like all of those things.
And then this has come also from you being a big fan of Elon Musk, right?
Some of it, but I would say ki Elon Musk is just, in my opinion, the hardest working human alive. So that's why I respect and sort of take him as my role model or idol. But the interests were there even before I knew of him. So yeah.
Fantastic, sir. I think my all questions are done. We had posted on Twitter about Twitter audience to ask the questions about you. I will ask their questions now. Uh, the 1% investor, at the rate 1% in asks that how do you analyze managements of small cap companies, else credit reports?
Hmm. So I think that the biggest place where I think most people sort of are unable to connect the dots is that they think that they are making their benchmark as, let's say, Infosys or HUL, right?
Hmm.
You cannot get a management of Infosys or HUL in a
Small cap.
500 or 1000 crore company. That's the first thing to understand. The second thing is, if you read through the journey of evolution of companies and how they have gone from being 100, 200, 500 crore to being 10,000 crore, 20,000 crore. If you read through that journey, then you understand how companies evolve. And like when people, or maybe I say that companies are like a moving picture, they're a movie, they're
Static.
not a static thing. That's when you understand it. And like, again, for things like that, value picker is like best in my opinion, because everyone has already created like a course for you to go through last 10 years of stuff in maybe 5 hours or something. So if you look at, let's say, Relaxo, you will figure out that even Relaxo had related party transactions, and investors are very concerned about it at that point in time. But slowly, as they started rectifying some of that, the perception changed, and with that, the valuations changed.
Fantastic. The next question is from Dr. Dhiman Bhatta1, Dr. Dhiman Bhattacharya. He are asking, what is your strategy for the next bear market?
So I think the like things like bull market, bear market will keep happening all the time. In these things, I personally find it very, again, comforting to rely on other people's experiences to guide my own strategy. If you listen to, let's say, Vijay Kedia sir and his interviews, he will talk about things like Atul Auto and like how his portfolio companies first went up 4x, 10x, like basically a lot, right? And in the bear market, they came down 80% or 75%, even great companies. And but then after the bear market, they again went up 10x. So the point is, these are like, it's
Cyclical.
part of the game, and it's like the euphoric stages and the depressive, and like when the intelligent investor says that Mr. Market is manic depressive, and that we should take advantage of Mr. Market's behavior and not be a part of that behavior. Like, that's basically what we learn, right? And that's what we need to put into practice. That like, if Mr. Market is manic depressive, I'm going to do my homework, be prepared, look for good companies available at good valuations, and invest money into them.
Fantastic. The next question is from Sachin the Vakil. Either is Sachin number NAV. He's asking, what will be the impact of India's IT and IT enabled companies' revenue dependent on European countries if there's a change in world order?
So I think that's a valid question, and we have to, I think, take it company by company, because again, like in our minds, we might say IT, that every company has a different makeup of where they're deriving their revenues from, right? We have to look at it company by company. For example, the one that I am most familiar with, Mastec, they derive like 32% of their revenue from Britain and UK, right? So for them, this Brexit thing happened. And then we had to evaluate it from that perspective, that what is going to happen now. What an investor would appreciate is everything where UK relied on Europe, it couldn't rely anymore. And so they had to develop their own systems. And that meant that there would be more growth in, their IT work in UK. So I think like that we have to look at it company by company. We like it might be sort of entertaining to talk about these things as IT sector mein kya hoga. I think it's more fruitful to look at it company by company.
Fantastic. The next question is from uh, Namak Chanda @ the Naman Chanda. He's asking how to differentiate between cyclical and structured growth.
I personally feel it will take me a lifetime to understand this, and even great practitioners like Samit Vartak sir still makes mistakes here. So I don't think I am capable enough of answering this, but I can at least talk about like what do I mean by this, right? I in fact tweeted about this today. Basically, what happens is because the stock market does not know whether the growth is structural or cyclical. Every time a company grows its earnings, the stock price will go up because we don't know. It could be structural, right?
Mhm.
Depending on the amount of trust that the stock market has in that growth, the stock price will and the valuations will keep going up depending on that, right? For example, if you look at Web of Global, it used to be 15 or 20 PE pre-COVID, and then COVID resulted in such great earnings growth for them, like 50% CAGR or something, 50%, 50, that the valuations went to 60 multiple. So valuation itself went up 4x. And then when we realized as investors that what Web of Global had done is pull their growth from the future into the present, sort of pulled
Mhm.
backward the growth from the future. Then the valuations corrected, and now it's available at 24 PE, which is nearer to the pre-COVID PE. My point is that like this is always a thing that is dynamic and it will keep evolving. And essentially, we have to understand the reasons that the company is growing and whether those reasons are sustainable or not. For example, in Webhub's case, probably the lack in my understanding was that the COVID was a big part of their earnings growth. And when COVID went away, then human behavior would again change and people would start doing in person shopping and not ordering online. And that would result in deceleration of growth. So, I mean, basically, we have to think about the underlying reasons, basically, for the growth.
The next question is from the spiritual trader Arindam Ramana. He's asking how do you evaluate management in small companies?
I think essentially the answer is really straightforward, right? We have to see across the spectrum what different companies have done and how their journeys have evolved, right? Like for example, if even if you look at related party transactions, you have to see the quantum of them, who it is with, understand the circumstances behind the related party transactions, and after that you can come to a conclusion about it, right? Whereas most people will say, oh no, related party transaction, I'm not getting into it. So there are different approaches in my view, and like my personal approach is to basically think about whether a reasonable businessman might have made these trade-offs. And I think again talking to experienced investors helps with these things, because you realize that these small company or like family owned companies are sometimes sort of misguided by their CAs in sort of uh, shortchanging the minority shareholders. And the most important thing, again, in my view, is to understand the company as an evolving picture and think about where the puck is moving, not where it is, because that's where the alpha will be generated. When an ugly duckling becomes a white swan, then that is when everyone will start chasing the white swan. So that's why it's important to track the ugly ducklings also.
That's why probably you invest in microcaps, right? Because the whole picture isn't seen yet.
Yeah, I mean, like as an example, look at Mirza, right? Uh, Probably it is the worst corporate governance company that I have invested in.
Correct.
Uh, but again, I think we have to understand the place where the corporate governance is moving. For example, folding in the private subsidiary, demerging the domestic business, and then we have to see how the rest of it evolves. Will they start doing con calls again? All of those things, right? And finally, I will point out a couple of things. One is that eventually investors want the same things, which is earnings growth, ROIC. If a company has these things, the market is forced to give it the clean chit. That's how it works. Just look at any example. Look at, like I said, Relaxo, right? They had the same related party transaction concerns. And finally, everyone gave them a clean chit. Because at the end of the day, what else can you do, right? If it's growing earnings, generating cash flow, Sada, what do you want? But I will point out that like fundamentally we want the corporate governance to be good or for it to be headed in the right direction. So that's the like the corporate governance part of it. But since it said management, I think the most important thing to evaluate is what is their vision for the company and are they willing to work hard for it? Because I don't want to own a small company. I want to own a small company which wants to become a medium company, right? So what are their aspirations? What are their goals? What are their tangible plans to achieve those goals? If you talk to investors about Goofic and like what are they doing, right? You'll realize that their CEO is such a intelligent fanatic. He's literally on the road all the time, talking to his clients, talking to his customers, talking to his suppliers, trying to understand the next big thing that they should be taking on. What are the needs of the customers? Going to conferences. Basically, it should be a person like me who is willing to work hard. So I think that would be for to me the most important thing. Hard work and if not integrity, then at least the direction of integrity.
Even if we look at the management of RECL Geotech, they work so very hard, and the governance of that management, the governance is absolutely on top.
Right. I
Fantastic.
mean, RSCL,
Yeah,
RSCL
yeah,
is
you can
probably,
continue.
I was just saying, RSCL is probably the best management for a microcap I have seen. They were actually told by some investor, let's do a one-on-one call. Even for that, they said, no, we'll record it and put it on the website because everyone should know what we are talking. The second thing is ki, in the con call, someone said plant visit, and they said ki, like if we allow you to do, then how will other investors get to know this stuff? I think pretty good, governance, especially for a micro cap. Also, the fact that they started doing con calls. Where will you find a 200 crore top line company doing con calls, right? So, yeah, pretty good governance and things are in the right place there.
And one more thing, any company that Sir or me I have mentioned is not a stock recommendation. So do your own
Right,
research. Uh,
right, right.
Correct. The next question is from Shinejit, the @Shinejit Sailor. He's asking how will he go about investing in SME stocks.
So actually, one of the very interesting things happened recently. In this last weekend, I was attending a investors conference and sort of talking to a lot of investors. Basically, uh, some of them have a concentrated portfolio in SME companies. So imagine that, like they own like 5, 6 SME companies. Just imagine that, right? It's basically my key takeaway was you should be willing to work extremely hard without naming the company because unless I've done my own due diligence, I don't just want to throw around names. Let's say the company is X, right? What this person did, they understood that this company is dealing with the government and that they need approval from the government. So they went to the people that are supposed to approve the company's projects and talk to them that, how do you evaluate? What are your thoughts? What is the direction? It's like imagine everything you can do, you need to do that in order to develop the conviction, right? Especially if the company does not do con calls. So these things become really, really important, like talking to as many stakeholders as possible. So the engineer working for the company, the client that the company works for, the suppliers that provide to the company, talk to everyone, including the government official that might approve the company's projects, and try to understand what is happening basically. But one more thing I want to say is ki in these like SME companies, one has to have a lot of patience basically, because they are very volatile, and like like also they're illiquid, so that makes them
Mm,
very volatile.
correct.
If you are invested and you want to get out, you might not be able to get out. So I would say SME is sort of closer to more like venture capital or startup investing basically. So you have to be prepared for that kind of like only one out of many bets might actually work well.
Because the information available is, I think, very less than microcaps and small caps also in SA.
Yeah, yeah, which is why like definitely having a company that does con call helps a lot. You can
Mm.
even join the con call. I've joined con call for Rajshri and RSCL and asked questions. Apart from that, of course, if it's a company that does not do con call, you have to work very hard on the ground. Like go to their
Scuttlebutt
office,
from.
go to their plant. Yeah, lot of scuttlebutt. And yeah, basically try to match the numbers and narratives, whatever the management is saying. Can they actually achieve it? What are the other stakeholders saying about that same target?
And can you also differentiate for the viewers about what is SME company and a normal main board company?
Basically, I think as far as my understanding goes, SEBI and these exchanges thought that why should only large companies be limited to raise money from public markets? Even a small company that is aiming to become like a not small but like maybe micro company or nano company which is aiming to become micro or small, they should be able to raise money, right? So that was the idea. And then there are BSc and NSc, separate sort of part of BSc and NSc. NSc emerge and then BSc SME, I think. And that is where the company can do a SME IPO. That's sort of, you can think of it as a different class of investments where like the volatility is more, risk is more.
And the
The
ticket
minimum
size is
amount of
also more. Yes.
minimum size of investment would be like 2 lakh, 3 lakh or something. And the idea is very clear. This is not for your run of the mill average person who is doing a 1,000 rupee SIP. This is not for that. This is for people who know their game, but they're willing to take that chance and do that kind of, like startup kind of investing. So, yeah.
Okay. The next question is from at the rate, at the rate, no, I think it's, the name is Suyog Sawan. Sir is asking which gaming business can be a multi-bagger in this decade. I would reshape it like which gaming business shows good potential, or which are the good characters of a gaming business in general.
So I would typically want to keep morality and investing disjoint. So I would not mind investing in alcohol or cigarette, but I would sort of be very uncomfortable with gaming
Mm.
because fundamentally it is trying to attack the limited willpower and the limited exposure that a very young human being has to modern world, right? That's the fundamental target audience for games. So like I don't know and I hope to not know, because again I think like if we reduce everything to profit and loss, like that to me is not the right way to do it either. Somewhere you have to draw the line. If I said I have a wonderful business model where we murder people and make money off of it, I think most people would be horrified and they would say no, no, no. I would not want to. Somewhere you have to draw the line, right? Again, I think like adults making choices that can harm themselves is okay. For example, pizza, burger. Again, people make choices that can harm themselves. That's okay. Compared to that, thing that targets children, making them addicted, like I'm very not interested in that part of the place. Yeah.
Yeah, I think most of the students in my class are also pretty addicted to games. Like, yeah, like 2 to 3 days also ago only we had a final exam, and in that time also they had brought their phones to play games. So imagine the kind of addiction they're suffering with in the exam hall also.
Yeah, I see it all around me, and like my own cousins and my like brother-in-law, like many people are uh, affected by this, and I think it's a real danger to human society. So I would not want to promote this in any way.
Correct. Uh, I think the next question is from a learner at the rate Patel Investor. Uh, ask him these two questions. The first one is, why is he actively investing in stocks? The second question is, will he be fine if in the long term he can't beat the bear market with good margins? Sorry, well, not the bear market. Will he be able to beat the market in general with good margins? Yeah,
Yeah,
that is question.
yeah.
Two questions.
In terms of like why I invest, I think it's very sort of the thing that hit me hard is if we spend all our lives doing jobs, essentially what is the point of life? That is something I couldn't understand. Like I could see my grandparents, my parents working until they're 60, and
Correct.
after that you what is there in life? So I was very clear that I need to have a very clearly defined objective where I like a evaluation criteria under which I retire, and I need to achieve it as soon as possible. And that's what caused me to like I should try to grow my capital as well as I can, and try to reach my goals as soon as I can, and then sort of like I still obviously want to add value to society. I don't want to watch Netflix all day. I want to do it on my own terms. I want to do it when I want to do it. I don't want to be forced to do it 9 to 5 every day. So that was my main motivating point. In terms of beating the market, um, I'm extremely scientific in my thought process. So if I think that I cannot beat the market, I would happily stop investing and invest money in index funds and call it a day. Like I am, to be honest, not going to just keep doing this randomly. Yeah.
The next question is from at the rate Psycho23, uh, and his username is Psycho. He's asking, what is the CAGR? What is his CAGR till now since the day he started investing in equity?
So actually, the very sort of relevant question. I saw that Jeevan sir had posted his returns yesterday for financial year. I think
Jivan sir means Jivan Patwa sir.
yeah, yeah. I think he had some absolutely crazy amount of returns. I think it was like 300% in FY21, and then on top of that, 33% in FY22. Right? Monster returns. So at that point, I thought that I should also just look at it. Uh, you should know what you're doing, right? If you cannot measure what you're doing, then it's what's the point of doing it? So I measured it, but one caveat I want to add is that I have only been doing this active investing thing for around 2 years. So I would say my very first investments, small scale, were in December 19, roughly 3 4 months before COVID, and that's when I have been sort of doing this from. I measured it yesterday, and until now it has been pretty good. But I think most of that comes down to luck, because like the starting valuations are so cheap for things. Like RSCL at 5 PE, that quality of company, it's hard to lose money on that. Uh, so there's, in my opinion, been a lot of luck until now. So again, I think last 2 years returns are not something one can or should extrapolate. But with that caveat, I think the XIRR was some 60 or 70% until now. But obviously, that's not what I'm expecting in the future. I would be more than happy if it's 20% every year. Like basically, if it's less than 20, then I would want to just give up and give my money to someone. But obviously, I want to aspirationally be above 25%. That's what I want for next 10 years, 20 years, and stuff.
The next question is from Khatri at the rate Harsh Khatri 111. He's asking, is he? I mean, is you participating in CV cycle?
In what?
Is CV upcycle? That's it. That's the question.
Okay, in the commercial vehicle upcycle.
Yeah.
Uh, so I think the thing is key, like again, like I've observed that many investors have a top-down way of viewing things. I think mine is more bottom-up. If I find a good company which I think has a differentiated business model, some kind of competitive advantages, where like it's easier for me to forecast the microeconomics of the company, the demand and supply for the things that they make, then I would be happy to invest. And um, basically, uh, to me, the key insight of investing has been that like we are paid to forecast the demand and supply for the products or the services of the company, and everything else is basically you can fit it into this framework. If the demand is growing faster than the supply, you will have pricing power, you will have good growth. If the demand for the entire industry is growing, that's industry tailwinds. If supply cannot grow very fast, those are moats, those are barriers to entry. Everything is basically demand and supply, and you're supposed to think about them. So yeah, I mean, I haven't found any such company, but if I do, then I'm happy to. If anything, I would say RACL might be one. Like they provide gears to tractors, but very minor or like mildly related kind of one. Yeah.
The last, I think the last question, our second last question, is from Life is Beautiful at the rate spin to 2050. He's asking, while investing in small caps, how important are factors like credit rating issue, not cooperating, pledge of shares, high management remunerations, bad balance sheet, but good growth prospects, no con calls, and minor pollution issues. Yeah, that's it.
I would say, each of these we have to evaluate it on a case by case basis. Like as an
Right.
example, take pledges, right? If you actually talk to many managements and read their con calls, what they will say is basically what happens is that the company does not have enough collateral on its own. So the banks force the management to pledge their holding in the company as a collateral for the loan given by the banks to the company. So it also matters what the pledge is for. If it's for like I will pledge my stake in the public company and then run a private company, that is a clear a red flag.
Red flag.
But if it's for supporting the operations of the listed company, I would say that's actually selflessness because you're going above and beyond. You're showing commitment to the company. So that would be a green flag. That would be a wonderful thing. So you have to evaluate it one by one. You mentioned two or three other things. Can you just go over them once more? The
Yeah,
other two or
yeah,
three
I
things.
will read again once the question again. He's saying, Life is Beautiful is saying, while investing in small caps, how important are factors like credit rating issues, not cooperating, pledge of shares, high management remunerations, bad balance sheet, but good growth prospects.
Yeah. The other two things he mentioned are not cooperating and high remuneration. So
Correct.
on not cooperating, basically what I found is it is not indicative of anything. There are two things that can happen. One is that if I change my rating agency, then I don't need to cooperate with the older one, right? And I would have to actually, I don't know if people know this, but I would have to keep paying the rating agency in order for them to. So imagine if the rating agency comes to me, they evaluate me and my debt, and for that they will charge me money. So I don't have to pay them if I'm a small business, and that's why they will stop cooperating. That's one. Second thing is if they don't need debt, they will stop cooperating. I don't need debt. Why do I need to cooperate with rating agency? Because every time you cooperate, you have to pay them. So that's the optimization. The last one is remuneration. I think this is one of the things where like most investors will just blacklist or sort of
Hmm.
disable list the companies based on remuneration. Again, I think it's important to see two or three important things. First, what are the qualifications of the person? If they have the kind of qualifications which merit getting those kind of salaries, then we should be okay with that, even if the pat is low, because it's about the value the person is adding to the company, right? If like I know my salary, if someone is adding similar kind of value to a microcap, why should they not be paid the same amount? Even if the microcap won't have the same amount of profits that Google
Oh,
has, but still it would need to pay if it needs to get the good talent. So you need to pay up for talent. It's as simple as that. Um, the other thing to keep in mind is the direction of the amount of payment to the directors and the promoters as a percentage of that over time. Over time, it's
correct.
because again the company is
Correct.
an evolving picture. If you look at the Pix transmissions thread, or like the thread that I created, or the value picker thread, you will again figure out that like people will say that directors are getting paid too much, things like that. But again, if you evaluate it over time, you will see that the profits have grown non-linearly, salaries have not grown non-linearly. So that's what you want, right? It might have a high starting base, but it's not growing non-linearly with profit.
I think that also happened in the RECL Gear Tech wala value picker thread, that the management, the some people were complaining about the management remunerations, but when they looked over the time since 2016 to
Right,
19, they noticed that it is reducing by the percentage of
right,
PAT.
right. Exactly. We have to see the evolving picture. Um, I think the last part was the balance sheet. I think balance sheet is very important actually, because what happens is what causes most companies to falter is that they overextend in the aspiration of delivering the growth. Like, as an example, again considering Mirza, most investors would sort of try to blacklist it based on the corporate governance, which definitely is questionable, and like no doubt about it. But the more concerning thing for more every investor should be the balance sheet. They were actually unable to manage the inventories until like this Q3 or Q2, maybe 2-3 quarters ago. They were not able to manage the inventories very well, and that is one of the big reasons why most investors were staying away, even the ones that knew the company very well. So my point being that is very important, like how you are controlling the balance sheet, and I mean, that is important for every company, including microcaps.
Fantastic. I think this was a 1 hour fantastic episode, sir. Very knowledgeable episode about investing, coding, everything, everything. Thanks for being on the show, sir. And I think
Yeah.
Sir is also conducting a Twitter space on how he manages his life, sorry, his investing journey and his the whole 9 to 5 job. So do everyone attend it if you want to get cool insights on how he does time management.
Yeah, I think your I think the podcast might come out slightly after the spaces, but thanks a lot.
Yeah, yeah.
I do hope that I am able to help whoever wants to balance it. But yeah, thanks a lot for having me, and I think you're doing wonderful work. I am very happy to see how much hard work you're putting in, and how much you're willing to learn and sort of evolve, and not just focus on one thing, but rather on learning, programming, on doing your school, on also investing. I think that's absolutely the right mindset to have, the mindset of a learner, mindset of wanting to learn and evolve all the time. And I'm very sure that with that mindset, you will achieve great things. So, all the best for that, and all the best wishes for your future.
Thank you. Thank you.